Hello there, my friends. Chris Marcus here with you on Thursday, August 30th, 2018 for this week's weekly Arcadia Market Wrap-Up. Amazing. We're already about to hit September. And certainly a lot of people talk about how there are often historically a lot of the big financial panics or drops, whether it's Black Friday or Lehman Brothers, that a lot of these have occurred in that September, October timeframe. I personally take that with a grain of salt because just because it happened back then doesn't necessarily mean this is what will happen now. Although to the degree that there are some who feel the whole thing is a lot more orchestrated than we've been led to believe all along. You take that as you will. Certainly the economics, wow, things happening fast this week because the economics would certainly support that we could see some turbulence in the coming months. Again, as always, I'm shocked it hasn't happened already based on what's actually going on. Sorry, my table's a little wobbly today, but first story here, 5 ways Trump could upend the strong dollar trend, say ING strategists, which for those familiar with the whole money printing regime, maybe not all that new here. But again, I point this out to the degree that, you have to remember, you don't have to remember, but I find it's helpful to remember that the majority of the world is still following the Keynesian economic system of best way to make our exports stronger and our economy better is by destroying the currency, which, it's essentially putting your goods on sale. And we're going to come back to this later, but you will sell more exports because they're cheaper, yet everybody else is paying for that subsidization because everything that you import, especially here in the US where I am, where a lot of the goods are imported, become more expensive when you have the lower currency. Yet here is, again, I believe it was ING Bank, saying the currency intervention, which is possible, changing the Fed's mandate, which it's interesting. If you actually look at the Fed's website, at least as what I remember of the dual mandate of maximum employment and stable prices, they've added a few things on there. So I think the Fed's already changed its mandate. Talking down the buck, blaming others for manipulation, completely abuse the trust of the world's reserve currency status, and yet go blame someone else. Unfortunately, that is how the game works these days, but we'll still keep sifting through it so you can know what's happening before it happens. Again, here's the latest sign. Pending home sales fall for 7th straight month in July. I've been talking for months and have been recommending, who we'll cover later, Dave Kranzler, an expert in the real estate market who has been on top of this. Also, somewhat anecdotally, yet I live here in Denver and have a friend who has been trying to sell her house. And really, for the last couple of years, I would always hear how people would put properties on the later that afternoon, the thing would be gone, where people couldn't. It was hard to find a home to buy. Certainly, that environment, based on her experience, has changed. So again, the signs are there. It is happening now. I don't think we're any longer talking about something that is far off. Certainly, the gold and silver and crypto pricing maybe not reacting in the same fashion yet, but these things are happening. Of course, here is an interesting story about the Chinese yuan. Hits 4-week high as China signals support. So a lot of people have been talking lately about the Chinese yuan being devaluated. And here in this chart, if you see on the left about 640, 655, 670, these levels are basically how many yuan it takes to buy $1. So as you see that chart going up there, means it's taking more, meaning the currency is worth less. And again, I'm not going to say that I could pinpoint with exact certainty what the Central Bank of China is thinking or doing. Yet it is interesting to me that during this same period, we see really it escalated from May onwards through, let's call that July, and then spiking again in August before coming down recently. Maybe it's a coincidence that this is at the same time we have trade wars, and again, everyone wants the weakest currency. So who knows? Maybe they are saying, all right, you want to start a trade war, we're going to initiate the currency war. Again, I'm speculating here, so I can't say that's the exact thinking within China, but certainly interesting, the timing of it. And Craig Hemke has written a lot about that. So if you'd like to dig in more, check out his work. And again, just a thought there. Maybe I'm off my rocker here, but and here we come back to U.S. to pay farmers $4.7 billion to offset trade conflict losses. So again, you're seeing firsthand how we hear these trade wars and wonder what's going to happen. And folks like myself and other Austrian economists are saying this is going to just accelerate the inflation. And here's an example of that. U.S. to pay the farmers $4.7 billion. Where is that money coming from? Either, has already been printed or will be funded with further printing. Of course, it seems like the farmers are not thrilled with that outcome because it has not, in their opinion, according to this article, made up for what has been lost. Farmers have been awaiting the details of up to $12 billion in aid. And again, I'm not trying to pick on the farmers here, more, let's pick on the government. We're always safe on that one. But I mean, imagine not just the farming industry, but this same setup playing out throughout healthcare, Medicare, the tank builders, and everything else, certainly in finance where we saw the bailouts years ago. So the same concept. And where does all this money come from? We're running massive deficits, which are being funded via printing. And again, more printing means that prices are going to go up. So this is the whole flaw of the Keynesian, let's make our currency weaker, because they keep doing it until the currency is worthless just about everywhere, which is what we're on track for. And again, why I like gold, silver, and Litecoin and a few other things as a response to that. Although again, it's not legal financial advice, but what I'm doing with my own money anyway. Interesting here, KC Daily Dispatch mentioning how while Turkey is experiencing its currency in free fall, many Turks also loading up on cryptocurrencies, have been embracing cryptos for years. Tells me more Turks will take refuge in cryptos if Lira keeps falling, because he mentions how many accounts there are. And let's see, yeah, this was interesting here. According to CoinMarketCap, which the site we always finish our videos on looking at the cryptos, trading volumes on BTC Turk soared 131% when the Lira was falling. Another Turkish crypto exchange, Paribu, saw a 108% spike in trading volume. Certainly, if I were sitting there with dollars or Lira in the face of this and Litecoin was still around 60 bucks, that's what I'd be doing as well. So actually I had to sell some Litecoin this week, which was not fun to do. Again, I'm still learning my lessons on diversification. So usually whatever I have is invested in the assets that I'm sitting here talking about. So at times when, for example, our beautiful new house we got here, at times when expenses come up, that is one of the things that in this case, it was unfortunate to sell at a price I didn't like. And I say this just as not to follow what I do perhaps, but again, with all that said, I'm able to continue living life and sleep at night doing what I need to do. So I feel the upside of gold, silver, and cryptos is incredible. I'm saying that based on what I do with my own money, yet at the same time saying, please trade responsibly within your means, because while I think the cryptos and the precious metals are going to go to levels that will stun people, I do also expect we will see the kind of volatility that we've seen. So just allow your investments to fit whatever amount that is for you, and whatever you're investing in, that, you know, can still focus on waking up, smiling each day, and living. So disclaimer done, and we'll go on to the latest news of EU looking to sidestep US sanctions with payment system plan. From French Finance Minister Bruno Le Maire, with Germany, we are determined to work on an independent European or Franco-German financing tool which would allow us to avoid being the collateral victims of US extraterritorial sanctions. Now Europe too. We're not just talking about Iran or China or Russia, other global superpowers. Turkey, I don't know where you want to stack them on size of global players, but President Erdogan, as my new Turkish friend Ali says is the correct way to pronounce his name, certainly not happy with the US. And here's Germany and France, which again dominate that Eurozone, and I can't imagine the other Europeans are, you know, it's not like I don't know, maybe Italy's thrilled with Goldman Sachs at this point. Again, Germany urging EU payment system without US to save the Iran deal. So whether you call this collateral damage, blowback, the effect of unintended consequences, it is amazing what's happening here. Stunned that I'm seeing it overdue in the same time, yet that these things are finally happening, and now we have Europe on that list. Here is an interesting article. If you want to take a look, the anti-dollar awakening could be ruder and sooner than most economists predict. This was on CNBC. Interesting article, which I'm not going to necessarily dig into now. But again, interesting that even CNBC and the mainstream media kind of waking up to what's going on. Here's another CNBC story, or CNBS, as well, I haven't met him personally, but I still consider the great Dave Janda a friend. Emailed him a couple of times. I love that guy. He calls it CNBS. I'll giggle at that and leave comment aside. But here, Moody's downgrades Ford's credit rating to one notch above junk bond status. It makes me giggle. Moody's was my first job out of college, which is getting a chapter in the book that I'm writing now. Good times. And again, you know, I'll try and be positive in my approach here, yet the idea that Moody's still has the U.S. Treasury rated as AAA, saying that essentially it is not possible. There's nothing you can do to have a better credit profile than the U.S. government, according to Moody's. So again, if you want to buy a great book whenever I finish it, I will dig more into that. But I would take any rating agencies with a grain of salt. Here is Butler Research, who covers the dynamics of what the banks and the hedge funds are duking out below the surface of the silver market, which maybe I'll be able to figure. Maybe I'll round up some people and make it into a movie one day. I think it would be a great Big Short Part 2. And Ted just does an incredible job of digging through that, putting it into perspective. Butler Research is a pay service that, in my opinion, is well worth it. And I'm a subscriber for about 7 or 8 years now, I guess. Although if you Google Ted Butler, you can also, he does post a fair amount of commentary for free as well. And if you're still watching the video at this point, please Google Ted Butler. You want to hear what he has to say. Similar, another recommendation to keep you entertained on the weekend. Here is my friend Dave Kranzler of Investment Research Dynamics. We did an interview on the Miles Franklin channel this week. And some of the stuff that he talks about, I don't know, what can I say? I'm biased, but I think it is well worth your time to listen to. And should you want to buy gold, I do recommend Miles Franklin, where I do write and have a business relationship, although, so again, don't do anything on my behalf, but if you are wondering where I would go to buy gold or silver, that is Miles Franklin. I believe, well, let's take a look at the darn phone number, pull it up there. Unofficial, unabashed, and proud to, I'm actually very proud to plug Miles Franklin. May have mentioned before the way that I started writing for them. I was thinking about having some gold and silver stored. And as I was doing my due diligence, I found what I'd heard for years, which, whether it was for folks from Sprott Global or otherwise, saying, call Andy Schekman of Miles Franklin. Turned out we got along really well. And so there, but that's how I found them. Number is 800-822-8080. Speaking of Andy Schekman, if you'd like to hear the voice of a person you might consider buying precious metals from, which I think is great. I love doing business with people I know and trust and respect. So if you Google perhaps 2018 Sprott Platinum Series, Miles Franklin investments, maybe interview with Andy Schekman and Rick Rule. Great interview about Andy's background, how he got into this, and really a mentor for me. So there you go. Last story before we do a quick recap on the levels. Wrap this baby up. We're doing a 4-day weekend here in Arcadiaville. But interesting one. Nigeria has taken its first steps in adopting China's Yuan as a reserve currency. I wrote an interview for Miles Franklin a couple months ago about how China was having a meeting with, I believe it was 14 African nations, about potentially using the Yuan as the reserve currency instead of the dollar. Was thinking about it again the other day, wondering what had happened, and here we go. Nigeria has become the latest African country to step up its bid to adopt Chinese yuan as a reserve currency. It's happening. It's amazing that it's happening, and the pricing is still fantastic if you want to do something about it. Curious myself how much longer that will last. I certainly, between the COMEX positioning in the precious metals and what I've been researching about the cryptos, I think we're sooner towards the end of that low pricing. Again, you got to make your own decisions, but that's what I see. I've been wrong before, but just because it has not happened yet doesn't mean it won't. Similar to the Big Short, as always mentioned, you know, it just happens when it does. And I'm excited about it. Bitcoin, $69.50. Beloved Litecoin is $60.48. Certainly Litecoin, a great level to buy in my opinion. I also love Veritasium. And speaking of Litecoin, the Litecoin Summit mid-September, I believe is September 14th and 15th in San Francisco. And I'm about 90% to be there. So if you do make it out there, or if you're interested, check it out. And should know in the next couple of days, but I'm leaning towards going there. And if you're watching and you make it out there, please do come say hello. Because I really do appreciate everyone who watches this and shares it. And again, I don't claim to have everything necessarily correct, but given the 11 years I spent on Wall Street and what I've researched since then, at least want to share what I think is helpful and people would be well served to know. And of course, support you doing what makes sense for you, which could be buying silver at below 15 bucks, below the cost of what it takes for many of the miners to get the metal. So again, I think we're getting close. When it happens, we'll see, but fascinating what's going on. Hopefully this helps put in perspective why I believe what I believe, and maybe gives you a little more clarity in making your own best decisions. So with that said, I'm taking tomorrow off. Big weekend here in Denver. I hope you all have a great holiday weekend. Make sure you hit the thumbs up button before you go. And with that said, I will see you next week. Thanks so much.